Good morning. It's Friday, August 9th, about 6 a.m. Central Time. Overnight, the precious metals are slightly higher after yesterday's explosive rally. You've got December gold up $6 at $24.69. September silver up 2 cents, $27.62. September copper up $7.75. That's almost a 2% move, and that really checks one of the boxes if you're looking for a massive silver recovery. You've got gold futures pushing up right now, making new highs on the session. Copper futures extending their gains here this morning, and silver futures are slightly muted. If all things hold, I believe that silver futures could make another big run here today. So looking at the markets though, it has been a volatile week, and the markets recovered on Thursday. The S&P 500 posted its best performance since 2022 and has continued to repair the damage that's been done from last week. The rally started with lower than expected initial claims, where 233,000 people filed claims versus 241,000 expected. The Nasdaq Composite finished the day up 2.9%, the S&P up 2.3%, and the Dow Jones up 1.8%. So traders expected a 0.5% interest rate cut at the Fed's next meeting on September 18th. Fed fund futures are pricing in a 53% chance of a half-point cut in September, down from 69% yesterday, and starting the week, it was a 98% according to the CME's Fed Watch tool. I told you 2 days ago that watch by the end of the week, it's going to be closer to 50-50. Right now it's 53.46. So one thing is yet to change. There's still 100% agreement that the Fed will engage in at least 1/4 basis point cut at that September meeting. Something else I told you was that markets will find some value, especially in the silver market, at that 200-day moving average. You could see a number of markets that were liquidated that still maintain a longer-term bullish structure, like the S&P 500 and the silver market that bounced aggressively off of the 200-day moving average this week. So if you haven't done yourself a favor, take a free 2-week trial of the Metals Edge in the link below. I break down some of the comprehensive proprietary levels of support and resistance, trend reversal points, and seasonal trade ideas covering gold and silver. We are engaged in a seasonal trade in the gold market right now that will end on August 13th. So if you're in that particular trade, give me a call. We're ratcheting up some of our stops and we're looking at some exit strategies here. Looking at when you do have a volatile week like this, one thing you want to look at is you want to take a step back and look at what the performance is on the week, kind of the scores on the board. You look at the crude oil market up 4% this week. I think that was kind of the sleeper out there that no one was really betting on. And then you look at the number of different products that are basically unchanged on the week. The volatility index, the Nasdaq, the dollar, the gold, the S&P. So gold is essentially unchanged on the week. So what are people fretting about? Same thing with the S&P 500. It's like it never happened. If you went to bed last week and you woke up this week, everything's unchanged. So the Dow Jones down about 0.5%, the Russell down 3/4, copper down 1.5%, but again, impressive recovery here today. Silver down 2.6%. That's why I think that if these markets can hold here today and we don't have any economic data breaking out, I really believe that when it was 90.5 to 1 on the silver market, as far as the gold-silver ratio, I think that's a bit stretched given where we're at, where things are going, and we snap back. We're about 89 to 1 right now, and realistically, I think we can get back down to about 80 to 1. So looking at these markets, couple key levels here. You get into the gold market, you want to see a close over 24.82. If we get that, market's going to flip to a bullish trend. Your key level support's going to be the 50-day moving average at 24.23. Below that's 24.02. You do not want to see a close below 2400 if you're a bull on the gold market. Looking at silver, we are still in this downward channel right now, so has a lot more to do if it's going to reverse any of these trends. I think the August 5th high, which is 28.81.5, that's really the key level. I think that that's what breaks things apart and takes silver significantly, potentially higher. So you don't want to see the market close below yesterday's low. That was the contract low, about 26.63 to 26.58, your pocket level of support on the silver market. We break below there, and it's not good at all. So we got to retrace that August 5th. I think also $28 is going to be a key level of resistance. You look at July 25th to about July 30th. That was your support level was $28. So old support, now new resistance. And if you look a number of times over the previous months, $28 has posted to be a resistance point on the silver market. Look at the copper. That's been in a downward trend here for really a few months now since that May peak, and we have a lot more work we've got to do. So copper futures really got to get above 415 to 418 in order to really be constructive and to start to turn their way back up. You got any questions, give me a call. I'll probably throw up an article on Kitco. I'll post on Zero Hedge today, and I'll be on the Schwab Network later on this afternoon at 2:40. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.